What's up, guys? So I just wanted to make a quick update video. Obviously, nothing really changed. I told you guys in my last video after warning you guys of this 5 to 10% correction to the downside for the S&P 500. I told you guys that after hitting 550 right here, which was the key level I was expecting us to bounce from, that we would then have a V-shaped recovery to the upside on the short term. So if I go on the daily, you can see that we did get that bounce from that key levels, but for now, the bounce is very weak. It's way weaker than I expected. This is not what I was expecting. If you guys remember in my last video, I said that the means was about 5% higher and that I was expecting a V-shaped recovery of 5% to the upside on the short term before fading back. So right now, obviously, this is not looking very bullish. I'm very disappointed. And this is why when we enter this type of risk-off environment, as I mentioned in my past video, the market becomes extremely hard to time on the short term. And everyone tries to time these top and bottoms and these reversals, and everyone basically gets wrecked. Also on the weekly right here, the momentum is still negative. We also have the trend cloud negative as well. At least we did bounce to that 550 level. Fear and greed at the moment is still in extreme fear. So we're not out of the woods yet. The AAI bull ratio survey is also to the floor here. We're at extreme levels seen, during the last bear market we had. Even COVID was not this low. And this is why I was expecting a bigger bounce. But at the moment, it has not happened. So we do need to be cautious. That's obviously not a very good sign, especially after the S&P 500 being down 10% peak to trough. And it's having a hard time just rallying and having a 50% retracement of the move. That is a sign of weakness. Quick announcement, guys. Also, in the link down below in the description, you'll be able to give me your username for TradingView to have access to these pre-indicators. So there should be a link down below that I created with Wix.com, and you'll be able just to click on it and send me your TradingView username to have access completely free to two amazing TradingView indicators. I will also be adding more eventually, but for now, I'm just going to stick with two that are going to be super useful during the upcoming bear market. Well, the first one is going to be the DCA Smart, which is a dollar cost averaging strategy that will systematically tell you when to buy. It's a super simple indicator, so you can basically just decide what type of investor you are, and then based on that, it's going to give you buy signals to dollar cost average. And right now, as you can see, that if you don't have any position in Tesla right now, it's a buying opportunity. The indicator is basically telling you to buy. For me personally, right, I already have 10%, so I'm good and I don't want to have more for now. But eventually, when I do double down on my Tesla position, I'm going to be using this exact same indicator. And then what's fun about it is on the side right here, you have a label that shows you all the statistic of the strategy and if you had followed it. Then the second indicator I'm going to give you guys for free, if you're interested, is the Smart Layer model, which basically uses the candle close of the weekly time frame to create these big support resistance choosing the 2-year past data minimum of a stock. So then combining those two together, in my humble opinion, creates a very nice combo when it comes to dollar cost averaging in the market. And you can see that despite the fact that the stock crashed, if you had followed this system, you would still be up 40% because you would have only bought during these bottoms. So hopefully you find some value in that. These tools are going to be amazing to make us a lot of money if I am correct on the bear market. So take advantage of that. So you just gotta give me your TradingView username, link down below. And in the next coming days, I should be able to give you access. And then obviously looking at what type of environment we're in right now for the broad market, I like to just look at the S&P 500 on the monthly time frame, and I like to look at the momentum of the S&P 500. That, in my humble opinion, for me has been the easiest way to receive a leading signal of what type of environment we're in. Are we in a risk-on environment or a risk-off environment? And I was expecting us to enter a bear market, but I was not expecting these signals to be triggered this early in the presidential cycle. Usually, the bear market tends to happen during the midterm year, which is next year, and bottom somewhere in that year. But right now, with everything the Trump administration is doing, and clearly there's one big problem right now for the rest of this year, and it's the 10-year treasury bill. With basically Trump administration in layman's term, they want the 10-year US treasury bill in the low 3% minimum. And I'm being conservative here, saying in the low 3%. Until then, I do not think they will be happy, and they will most likely continue creating a lot of uncertainty in the markets to basically continue pushing the economy into a slowdown, which will then force the central bank to lower rates way more aggressively that they're basically projecting for the rest of this year. They're only projecting 2 rate cuts in the US, which is pretty crazy, if you ask me. So because of that, we could see a tug of war between the Trump administration and the central bank. And that right there creates uncertainty, which obviously is not going to be good for risk assets like crypto, which I'm also going to talk about. So going back to the S&P 500, the momentum on the monthly time frame is key. And right now, as you guys can see, the MACD indicator, which basically just shows you the momentum, has now finally crossed to the downside. And you can see that we have one red month right here. So that obviously is a huge red flag. And then if you look at the trend cloud momentum right here, you can see that it turned blue. So that basically means that the momentum in the S&P 500 actually stopped early January. Early January, this indicator was already telling us to be cautious because the momentum turned neutral. And that's pretty much how you can know in what type of environment we're in. So when we go back bullish right here, right, this is a period of risk on in the market. And that's when you buy crypto and you buy all the other risk assets. And this is one of the reasons why I was stopped out of crypto. For me personally, when it comes to trading crypto, it's about the S&P 500. So I just look at the S&P 500, and then when we enter back in a risk on environment, that's when I start buying crypto. That's what I was doing in 2023. I'm not happy with being stopped out. I hope I'm wrong, by the way. But right now, everything is basically pointing towards me just not doing too much, having a lot of cash, and just being patient and letting the market sort it all. And afterwards, if it ends up being a fake out, I'll get back in, and we'll see it here with just the momentum. And then just looking at the 6-month trailing Sharpe ratio of the S&P 500, we're at these very high levels. Usually, I would be the first one saying this is a great buying opportunity when the market is down 10%. The problem is you also need to pay attention to internals. And well, right now, we're very high. Typically, when we're in this half bottom right here, in this ballpark, that's a good time when you actually want to be buying the effing dip. So hopefully that helps and gives you guys a little bit of value so you can learn by yourself what type of environment we're in the market, and when is the good time to buy the effing dip, and when is it time to just go on vacation. All right, so that's it for the S&P 500. Very disappointed with the short-term rally we just had. It should continue for the next coming weeks, but it's not looking good, being honest. This is why you want to be cautious when it comes to these short-term moves during a lot of market volatility. It's very hard to time. So don't be a hero. As I said, just survive 2025. Afterwards, it's going to be an amazing buying opportunity. And it's probably going to be life-changing. Like cash is going to be king. And right now, cash is king according to my own systemic strategy that I like to just listen and follow. So this is why I got stopped out of crypto. I love Bitcoin, I love Solana, but at the end of the day, I need to respect my system. And right now, everything is telling me we're now in a risk-off environment for the next coming months. All right, guys, so same thing for Bitcoin as well. As you guys can see, the trend cloud is blue, so that's neutral. There's no trend on the monthly time frame for Bitcoin. So if I am wrong on what I'm saying, it's very simple. I'm just going to look at the S&P 500, the monthly time frame, and Bitcoin. And you can see that when this cloud turns green, that's when we get these 20 to 40% move to the upside for Bitcoin. You don't need to be a genius. And in the meantime, you can just chill and do nothing, right? So right now for me, the trend is neutral. So there's no reason for me to get back in. I hope I'm wrong. I hope that it goes back bullish and then I can take on some nice trades. There's going to be a lot of money. If it happens, we're most likely going to have one last leg to the upside for Bitcoin and crypto as a whole. But at the moment, nothing is looking really good. Also on the weekly time frame for Bitcoin, you can see the cloud is negative, it's red, and the MACD is still negative. This right here is when I warned you guys that we were entering negative momentum on the weekly time frame, and that was the number one time frame we want to keep an eye on, and that until this crossed back to the upside, we wouldn't most likely see another move higher. And that's when I was selling a lot of covered calls against my ATF position of Bitcoin. So when it comes to hedging yourself, in my humble opinion, I like doing it just looking at the momentum on the weekly, and then I start hedging myself when we are no longer in a uptrend. So if I'm wrong, I'll see it here with these trend following metrics, and then I'll be able to let you guys know and get back in. And I hope I'm wrong, and you guys can clown me in 3 months from now for, like, having to get stopped out. But at the end of the day, for me, it's important to just respect my strategies and my systems. And then Solana, obviously, I told you guys 113, 114 was my target based on the smart layer model right here. That's exactly where we went to the penny in that ballpark. Right now, there's no reason for me to take any trade on Solana. Trend following is negative. And at the end of the day, when it comes to crypto is all about momentum. So if everything goes back bullish, that's going to be a great time to catch a nice big leg to the upside. But until then, I would be cautious. And then on the monthly time frame as well, you can see we just crossed negative here. So if the S&P 500 was still bullish, I would still be bullish on crypto. But for me right now, I'm going to stay away, and I'm just going to wait for the market to tell me we're no longer in a risk-off environment. So hopefully that helps. That's pretty much it. Maybe talk about Tesla, right? So Tesla has been probably the biggest fumble ever. Long term, nothing changed. I'm happy to see that, we're seeing some strength on the buy side here. But at the end of the day, everything is still negative for Tesla as well. Long term, this company will be doing very well, in my humble opinion. But for now, obviously, until Elon pivots or gets ousted as CEO, Tesla is going to have a hard time, personally, in my humble opinion. It's a management crisis going on with Tesla. And that is one thing that the Wall Street does not like, especially when it's mixed with politics. And obviously, you've probably seen what's going on in the past couple of weeks with all the terrorist attacks on the company. It's pretty crazy. So that's kind of why you just got to be careful. For me personally, I have 10%, and that is the amount where I'm comfortable right now with all the volatility that Elon Musk has created for the company. I would love to double down on that position, but right now, for me personally, it's not the right time. I'm going to wait also for just the broad market to go back into risk on mode before doing so. So hopefully that helps, guys. It's pretty much it. Nothing really changed. So I just wanted to make a quick update video. Let you guys know we're still in a risk-off environment right now as we speak, in my humble opinion. I could be wrong. I'll let you guys know. My system will tell me if I'm wrong or not. But for me right now, this is what everything is telling me. So just be cautious. Even this short-term bounce was not very strong. We'll see, it could continue and go up a couple of percentage in the next coming weeks. So that's pretty much it. And then other stocks I have an eye on, obviously Robinhood, right? So this was a good trade for me on the short term, right? Just selling cash secured puts at these levels right here, 40 strike price. Right now we are back at 44. So right now you just want to keep an eye on very strong stocks with very strong fundamentals. You want to create a watch list, add them, and just wait, be patient. And when the time comes, you'll know just looking at the S&P 500, and then you can just start dollar cost averaging in those assets. So right now for me, Robinhood is a stock where I don't mind getting exercise. So that's why I sold some cash secured puts, but I did not buy the equity. So I'm just trading options around stocks right now. And some of them is Robinhood, Tesla, Nvidia, Amazon, SoFi, right? These type of very liquid stocks. So hopefully that helps, guys. It's pretty much it. But definitely Robinhoods should be on your watch list once we have the bear market and we know, okay, all the risk is done. Now we're going to have a nice 2-year period to the upside. Hood, for me personally, is going to be on my watch list. Not financial advice, obviously. And yeah, so basically right now, just be cautious. that's pretty much it. I think I said everything I needed to say. So have a beautiful day, guys, and catch you in the next video. May God bless you.